Yeah, well, we're all mixed up, I guess. I'm on that side. Good to have you here, everyone. Really excited to kickstart this panel about DeFi, a topic that is at our dear hearts, I guess, for all of us. And let's maybe start with a quick round of introduction. The pictures are actually a little bit messed up, so you guys know who is who. I'm Niels. You see me on the left there. I've been given the opportunity to introduce myself and Vesu in the morning. And yeah, Richard.
Yeah, testing. Okay. Yeah, my name's Richard, head of products at Nostra. We are a crypto super app built on Starknet, which is a money market where you can swap your favorite crypto. We have a DEX, and also we're launching liquid staking soon. So, yep, super exciting times and excited to be here.
Hello everyone, so I'm Matthias, the co-founder of Pragma. We're basically an fully on-chain oracle on Starknet, pretty much powering the whole DeFi ecosystem, Nostra, Vesu, and others. So yeah, really happy to be here and deep dive into the needs of DeFi.
They're also providing the oracle for the ETH Stark price for the sequencer. I'm Liron, leading business development at Starkware. I've been at Starkware for nearly 3 years. Right now, there's a lot of work with helping bring infrastructure and applications to the public Starknet network. We're also looking at building out different L3 app chains, L2 app chains, providing proving services to different teams, and just helping build the Stark ecosystem.
Cool, great. Thanks to for having you guys. So I like to think of DeFi, as a service that we provide, for a larger ecosystem like Starknet, for the users on Starknet. Users, want to know what they can do with their assets, and I think, given that Stark is, in circulation now and has been distributed, probably a question that is on everyone's mind is, what can I do with my Stark now, and what can DeFi or what will DeFi do for me so I can actually use my Stark in a good way. So I think a question, I want to start with you, Richard. Will there be something like StarkFi, a meme, something where DeFi will offer a lot of opportunities for Stark holders? What will DeFi do?
Yeah, so of course I think it was highly anticipated, the provisions and Stark and everything. If you think about it, there's about $1 billion, over $1 billion worth of value that's been sort of injected into Starknet ecosystem. And a portion of that has trickled into DeFi. I think when we checked last week, it was about 10 to 5% trickling into DeFi, like being used. So there's still about 900 million worth of Stark not in DeFi, not being used at the moment and sitting idle. But essentially that's value, that's life, that is energy, right? And I think, the distribution was great in the provisions, I'd say. It was it was fair. There's quite a large, Leon could probably speak to that more, but there's a lot of recipients of Stark. And so now that value can circulate within Starknet. And Nostra is one of those places where you can use it as well. How you can use Stark, you can earn yield, deposit it in DEX pools. You can use it in a money market. You can make it try to work for you. There's new opportunities with that within DeFi. I think most of the protocols were live and trying to support Stark from day one, and it was a big sort of like effort to do that, coordinated effort. And then also another exciting thing that's coming is staking on Starknet. And last week we announced that we're going to be launching Nostra Liquid Staking, which is a liquid staking token for Stark, for the Stark token. Sort of a la staked ETH, where users can still keep their liquidity and get the future staking rewards. So yeah, I mean, it's super exciting. There's lots of value now circulating in this ecosystem to use and take advantage of arbitrage opportunities, yield farming, etc. and I think we're just getting started. Not to mention that DeFi Spring as well was launched a few weeks ago, where 40 million Stark has been allocated to sort of invigorate the DeFi ecosystem. So lots of protocols that are participating, that trickles down to the users ultimately. So there's value there that's coming in.
Yeah, no, to bounce on that, I totally agree. Like I think one of the main challenges that we'll have in DeFi on Starknet is to keep the yield natural and organic. The DeFi Spring is a very great opportunity and like a very good way of boosting the whole DeFi ecosystem, which is still very young, very early. Like we are just at the very early stages of this whole DeFi. But the real challenge will be to bring smart liquidity, right? Liquidity that will stay here, liquidity that will be strong, actual whales, people that are not afraid to stay here for. But we need to give them use cases and to give them real yield and not just yield that comes from the foundation. I mean, even we all like this yield. And so for this, the liquid staking is one of this real yield. We should probably focus on other sources of yield in the future, like real-world assets, like bringing actual yield-generating assets on Starknet. So there is DAI, there is a bunch of yield tokens like the Yearn Finance, all kind of these tokens that have a base yield, and that would make Starknet a place where where people would just come and farm the incentives, but will actually stay for some real yield, real use cases. With great protocols that you guys are building. So I think for me that's the main challenge about the Stark FI is not just saying, hey, okay, it's good, we have almost, let's say we reach 1 billion in DeFi TVL. That shouldn't be, we should be careful because we've seen many ecosystems grow to 1 billion and fall down to pretty much nothing. So yeah, that's, let's be careful about all that, build cool applications that are unique to Starknet. We need to take advantage of what Starknet offers and not just copy-paste what exists out there. We'll see how it goes. We have a long road ahead of us. Let's see.
I mean, just on that point, I would agree as well that we've seen historically incentive programs go wrong and be short-lived. The way the DeFi committee is looking at it is a 6 to 8 month program, and would distribute the 40 million across that period of time. It's to be more competitive with other L2s. We want larger sort of players to come on to Starknet and be able to swap and have minimal price impact. And I think that's one of the key reasons why people won't swap and bring larger money into the ecosystem. I definitely see that, and we're doing it on a sort of a fortnightly basis where we can always tweak the incentives up and down depending on what we see. So trying to make it sustainable in that way. Yeah, but I agree.
You've mentioned liquid staking already, right? And so staking, liquid staking, and then restaking is a big narrative in the Ethereum world, right? Do you see us moving to restaking too anytime soon? Liron, maybe? Do you have an opinion on that?
I can make some comments on restaking. I think maybe some meta comments. Firstly, people underestimate the security risks of restaking. So, I mean, the Eigenlayer is a classic example here. They publicly write about this in the white paper. If you now allow your staked ETH to be used to validate another new app chain, then you risk being slashed because you're staking on that app chain, or you give up the self-custody of these keys in order to let somebody else run a validator with those keys. There are non-negligible risks that need to be taken into account. It's not just, I'm getting free yield, another free network to validate. There are risks for each thing. But I think just having this liquid staking of these tokens, I guess the primary goal you want is maximal utility of tokens. Utility can be for capital appreciation, yield, meaning you are running validators, but also being active in governance, being active in voting, in staking. It's all very healthy stuff.
Yeah, I think it's an important point, right? I always have to think about both sides of this equation. its yield and its risk, right? And what additional risk would we introduce? So it's definitely be good to be careful about things. We have seen, a lot of uptake in Bitcoin and crypto in general, with the launch of Bitcoin ETFs earlier this year, and it's crazy to watch, that those volumes that suddenly now actually kick in, not in DeFi, but in TradFi effectively, right? But just making these products, crypto in general, available to a broader group, to also, different types of investors, institutional investors, really accelerates the entire space, right? And so we will definitely also see, this improving the whole ecosystem for DeFi. Do you think, this will also help us, or DeFi, Starknet in particular, in a longer time horizon, to attract those institutional investors that now actually have access to Bitcoin, to plain crypto assets? Because once you have access to plain crypto assets, the next thing usually, you want to earn some yield on it, like we see with T-bills, that you earn relatively risk-free yield on the US dollar. Staking kind of is the risk-free rate almost of Ethereum. Will we see, this potential be unlocked for DeFi too, and in particular for Starknet? Liron?
I can try to answer that. I think with institutions coming to Starknet, there's two things that need to happen. First is on the infrastructure side, there needs to be a bit more, I try to work on this on a day-to-day basis, but like bringing in the institutional infrastructure, custodians, MPC providers, exchanges, you can read between the lines the different names of individual companies. It's very important to have the right tools that these institutions require, both from a compliance perspective, they have certain names or brands or technologies that they need, but also from their own risk management. And the second point I'll make with institutions, they're very hungry for yield. Like, even in the traditional markets, one reason why gold isn't so adopted by institutions is because you just buy your gold and it sits. You don't earn yield on it. If you do earn yield from it, you've defeated the whole purpose of buying gold. Bitcoin has that challenge. You can get yield, and then you're playing with fire. Look at Celsius for that example. But native yield, like ETH staking, Stark staking, that's something that's interesting because you know where the yield's coming. It's sustainable. It's organic, right? Like every other yield, there are risks involved, and you want to understand where the yield is and make sure it's organic. I think once you have the infrastructure and the business case, institutions will come.
Yeah, and I think we can also take the example of Paradex, that I think did a very good job of first onboarding institutionals in their private beta phase. So like onboarding institutional is not something easy to do. Like it's something that takes time. We know like working with institutions is a slow process. They need a lot of security guarantees. They need a lot of trust just in what they're using. It's not just degen retail. Like it's not the same process, and we have to be very conscious of these when we. So building a product for institutions and for retail is not the same thing, and that's why we see many protocols even separating completely both. Like Aave have their ARC project, they have their retail Aave. I think as soon as we can, users can come and bring their own risk profile. It's something we see more often being done. So like bring your own risk, as a lot of people say. Then it becomes, you don't need the separation of platforms. You can just have one platform, and whether you're institutional or more degen people, you come with your own risk, you have your own parameters, and you can use DeFi depending on who you are, what are your objectives, what's your risk profile, and we should definitely aim for that on Starknet.
I think you mentioned it right. Things around Aave and let's say experiments or certain approaches they took to actually onboard more institutional users to Aave Arc, right, being an example. Do you think that as a money market, we have to do or provide a specific environment, infrastructure, or service such that we can even onboard those users? Richard, do you have it?
Yeah, so I guess larger players have regulatory sort of procedures. Then they have they and compliance, etc. They need to know who their counterparty is, so there needs to be ring fencing around it. That's why you have that's why Aave built Arc, and you've got maybe Ondo and permission DeFi, because at the end of the day they need to know who's on the other side for money laundering, AML, blah blah blah. And so, yeah, they cannot just dip their toe into DeFi because they just do not know who the wallet address is. And so, I think that's why the institutions coming meme is here. It's here for Bitcoin, but I think it's going to take a lot longer for that permission DeFi ecosystem to be built out. And I think Leron makes a good point. You need the infrastructure in order for that to happen, right? I mean, I remember 2017 when the Bitcoin futures ETF came live, and then everyone's saying institutions coming, and it's only been like 6 years since then,
Yep.
or 5, and now they're kind of coming. You can see what the effect of having just a custodian, Coinbase, and BlackRock, big institutional trusted names coming together, and then people the big institutions will then trust to dip their toe and be allocated, and that's just the Bitcoin. So it took that long for institutions to come in size. I think it's going to take a little bit longer for them to come to DeFi.
Right. Yep. Let's move on to a little bit of a different topic. Something that's been on our minds today, especially with the Denkun upgrade or fork. What does it do for us? We talk about it will reduce fees and stuff. How does it help DeFi and some of the applications that we build, and ultimately, of course, the users, right? How will you actually experience these fee reductions? Matthias, do you have?
So for us, it's a pretty, I would say, obvious example. Oracles are, I think, one of the most critical infrastructure for DeFi, and one of the infrastructure that uses the most data, right? Because what an Oracle does very simply is just pushing data from the off-chain world on-chain. And so today's EIP was very a great day for us. We've been waiting for a long time and actually reduced our cost by 95%. That just opens a whole new world of applications possible, right? Because now we're able to update the data pretty much every Starknet block, and so you always have access to the latest data. That makes liquidations more efficient. That makes just the whole DeFi space more efficient, basically. And in terms of things you can do, because we're on Starknet, there are things we can do that we could not do before in terms of computation. Now that we have a lot of data and it's cheap to push this updated data, we can do stuff like compute realized volatility, implied volatility, like yield curves, or have dynamic collateralized depth ratio. So it's like things that in DeFi have not been done yet, because it's hard and people tend to just rely on governance to update parameters every few months. And just things are not dynamic, do not react to the whole environment. And we know that, especially in crypto, we have a lot of volatility. We have a lot of things that can happen very quickly. And the DeFi space just doesn't have the tools right now to react quickly to these things, mostly because of the slowness of oracles and the computation that we're just limited in computation in these blockchain environments. So yeah, we're very excited about today's upgrade and the whole new world of data feeds that it opens. I think what we're going to see is a lot of the current market maker models that exist out there in TradFi, and in DeFi was still very limited to very basic models, like even if you look at lending protocols that have this very basic interest rate curves, we're still very early compared to what we know how to do and how interest rates should evolve, how we can compute volatility and these kind of things. So yeah, we're very excited to see DeFi catch up a bit, at least on this side on TradeFi, and then innovate in unique ways as well, right? Because it's not catching up is great, but we can also we need to keep all of this permissionless, trustless, and all that everything that makes us just love DeFi and use DeFi rather than going to our bank. Yeah, I think those are.
So just for the benefit of everyone, Pragma is an oracle, right? And you guys have already pushed a lot of data on chain that consuming apps can use, right? And now you're saying with this, upgrade, it actually reduces your cost from, yesterday to today by 95%.
Yeah, 95% right now, which is
crazy.
It depends on the blob market, but right now, yeah.
Cool. And so obviously that just results in that we can push even more data, is what you're saying, on chain, and we can do cool things with that data. What do you have an idea, Richard, of something that this could benefit, let's say, Nostra?
I would say, I mean, it does open things up a little bit, or quite a lot, actually, should I say. I've played around with other applications and other networks who say no names, but things like DCAing, dollar cost averaging with a price effectively, right? Now, if it's a cent or a few cents to schedule that in, rather than a few dollars, it's more appealing, right? More conducive for lower values transactions. Also, sort of T-wapping if you're also on, it's a sort of a larger size, another way to say it. So that's a couple of things. Also, there could be a future where there's an intersection between AI and DeFi, where you got maybe AI agents that are rebalancing portfolios and strategies, and it's cost effective to run them because again they can do it regularly because of cheap transactions. So there's a good few interesting things that we can do. We can have a lot more. We should see a lot more volume and activity, given that people won't be turned off or turned away by there being costly or prohibitive fees. So super exciting to see how the effects play out over the next few weeks, and we'll see them in the metrics.
Cool. Do you have something else you wanted to add, Liron, or you think you're good on that topic?
I'll just share an anecdote. Vitalik, when he talked about the roll-up roadmap like a few years ago, he said it shouldn't cost more than 5 cents to initiate a transaction on Ethereum or with Ethereum security. And today we reached that. Like Avi, the chief product officer of Starknet, I've never seen him so happy, really. Like provisions, building the Starknet, today was the happiest I've seen him, just because you see firsthand transactions go, depending on the transaction, roughly like 90% in reduction. It's huge. Like people using Ethereum today, before today, you wanted to, it's like decentralized, democratized finance, but it costs you $100 to do a transaction when gas fees are high. Today, that's being completely unlocked. It's a big deal.
Cool. Yeah, so we have, assets on Starknet, right?
I just wanted to add something on this topic. One very simple example that trading indicators that a lot of people use, like exponential moving average, all these kind of things. Right now, you would dream of computing that on-chain, but it really doesn't exist. And with this update and with these cheap fees, we can actually do that. And that opens up to very interesting products, I think, in the future. Just mimicking this trading strategies on-chain, like that's, never happened before, and can't wait to see that.
Right, and I think as you alluded to before, from a protocol design perspective, it allows you to do much more complex things too if you have this data available on chain, right? And you can actually fetch it, let's say, from an Oracle provider. All things around what we currently usually do in a static manner, manually updating certain parameters, right? You can now think of more advanced autonomous, controllers around these things. Think about, loan to value ratios in a money market, right? If we have this data available and the logic to actually transform that data, we can, just do so many more things, that will ultimately help decentralize even more, right? So yeah, what I wanted to say before, right? So we have assets, we have interesting assets. With Stark, we've obviously had a boost, right? In the capital, in the value that's available on Starknet. We have staking, kind of, some base yield, right? We have all sorts of DeFi projects. We have money market, DEXs, very advanced projects. There is some things to do on the infrastructure side, I think, to actually onboard certain user types. But what comes next now? What are we, what are we missing, or what are the next steps? What do we have to do as a community, as Starknet, to actually make this next leap, to onboard the next users over to Starknet? Do you have a specific collection of points, Jeroen?
I have some important comments. I want to. A premise for this whole discussion is that we're building this in the right place. One thing I'm shocked that the broader crypto community has let happen is the lack of security with competing solutions, specifically optimistic rollups. And maybe I'm shifting your question a bit, but it's worth saying, like, DeFi is only possible at scale on L2s when there's ZK rollups. Like a 7-day withdrawal period for the long tail of assets is just not viable if you want people to be bridging in and out and providing liquidity. Layer 3 app chains for DeFi are not viable on optimistic rollups unless you have. So listen to this design I just heard last week for an optimistic rollup running as an L3 with Validium data availability, where, like, I don't understand. Like, if you stake, you have to every single L3 that spins up for an optimistic rollup, you have to stake tokens dedicated to only that L3. You could do restaking, but there are risks there as well. The right place to be that's not secure at all. And then if it's a Validium DA, then you're trusting somebody from that committee to submit a fraud proof to the staker, and that the staker's willing, like, cares about losing what they've staked. It's a complete mess. Whereas with ZK rollups, you submit the proof gets verified, you're good to go. So we're building the right place, the infrastructure is coming, it's going to be great. Once you have that, app chains. So you can run a lending protocol as its own app chain on L3, collecting fees in their native token, not having congestion of the public network, still settling proofs to the public network, so there's value accrual to the public network. Those are big use cases that are unlocked. Currently, there are a few app chains running as L2s that hopefully get moved up to L3s. That's a big thing on the roadmap. Another thing, user experience. So let's say, like we talked about traditional finance adoption. Let's say you only have USDC in your wallet. Can you pay transaction fees with that? There'll be Paymaster in a few releases. That's a big unlock as well now. Users don't need to worry about, oh, I don't have Stark to pay fees. It's okay. The sequencer can take the USDC and know what the Pragma can provide the Oracle pricing for the USDC to Stark exchange rate, and the sequencer just collects the USDC instead. Yeah. So I took your question in a different direction, but it was an important comment to make.
Matthias, do you have a wish list or something that you...
I think one of the main question there is, do we want the whole DeFi liquidity to stay on the L1? Like, is that in an ideal world, do we want just liquidity to stay on the base layer, to stay where it's the most secure and where we can, where's the most secure? Or do we want to split the liquidity amongst all of these L2s, L3s? Personally, my take is that I would love to see liquidity stay on the L1 and just have L2s, L3s just control this liquidity through ZK proofs and just send data on L1. But it's not what's happening. So I don't know. We've seen there are some projects trying to do some DeFi pooling. It's very hard, especially for lending. It's for AMMs, it's very hard. For lending, it's a bit easier, but still, it's not that practical. So yeah, liquidity fragmentation, I think, is one of the biggest challenges of DeFi, and we don't. No one has the best solution right now.
And maybe even more so if you think about L3s then, and liquidity being even more fragmented.
Yeah, especially with L3s. yeah, I mean, there are shared sequencers that do propose some kind of solution. Aave has this interesting design as well, where they have the instead of going cross-chain just by deploying their app, they're just building a bridge with all the other chains. Yeah, so there will be solutions, but we should be careful about that, because the main advantage of DeFi is to have a liquidity all at a same place and having all the protocols that can tap into the same liquidity. And we should keep this property, I think.
Richard.
I would just say, I guess, as an L2, you want it to be fast and cheap. And I think that's a nice environment for payments. So I would like to see, maybe next year, another StarkCity where I can pay for coffee with Stark on Starknet. That I think is something worth aiming for. But apart from that, I think that we're just going to build on the foundations that have been set now. There's a whole bunch of value and a lot of things to do, and I think it's about being creative, pushing the boundaries, and trying to, make it an exciting place to be for users, for DeFi specialists, for even NFT users, etc. And so, yeah, I think it just needs to be a nice environment for lots of opportunities, building the culture. We need perhaps a token meme coin to go to the moon, and then make everyone a bit more excited. So yeah, lots of things.
Been speaking a lot to people today too, and I think one thing that I've heard a lot was actually builders and founders, right? In particular, also technical backgrounds, right? And I guess it's something that every ecosystem, every community is looking for, right? Do you feel the same way? Do we actually need more builders, people, who come in and build this payment system, for instance? And where can we get them? Where do we find those?
Yeah, I think you definitely need more builders. I think builders are. It's like if you think about a country, it's derelict land, or it's like abandoned land. And when people migrate to a country, you need shops, you need business, you need enterprise, and it's the people that migrate to the country and see the opportunity, see the land, and start building. Is the first people to kind of take advantage of that. So we need builders. There's a lot of hackathons happening. I think even the DeFi committee are going to try to support a specific hackathon and a call for DeFi builders specifically as well. So yeah.
Okay. If there is no other comment on that, I think we have 2 minutes. Maybe there is some question that you guys have. Maybe you have a wish list. What do you want DeFi to actually do, for you, so you can do more with your with your assets on Starknet? If there's a question or a comment from you guys, it's the time now. And if there is no wish, I can just, understand that actually, all these great founders here did, a great job at delivering, the tools that you guys need to grow Starknet with us. Good. Well, yeah.
Thank you.
I think we're at the end then.
Thank you.
Thank you very much.